Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the market recap video for today, September 14th. And what a day it was. Actually, really quite boring, but what a week that is coming at us. Obviously, the market today really kind of didn't do much at all. Down a little bit across the board with the Nasdaq down about 0.3%. The S&P 500 down about 0.4%. The Dow Jones down another 0.4%, but really, nothing to get too caught up about. It was really kind of done on average volume, as you can see here. Not a lot of action going either way, and that's to be expected, given that, perhaps one of the most important days of the year so far is coming up this Thursday with the Central Bank of the United States, otherwise known as the FOMC. The FOMC has they're looking at interest rates, monetary policy. Now, for those of you who are not that familiar with monetary policy, interest rates and whatnot, interest rates have an absolute tremendous amount to do with the overall marketplace, the dollar supply, the value of the dollar, and equity prices. And, when you're tracking the bubbled markets of the past, 18, 19, 20 years, you're talking .com, you're talking subprime, and now you're talking interest rate driven through the Bernanke markets that we've had since 2009. And it's been now 6 years into the so-called recovery. And despite the fact that we came out of a recession in April of 2009, we're currently sitting in September of 2015, and we not once have we raised interest rates. We've lowered interest rates to zero. We're expecting to we've printed 4.5 to 4.7 trillion dollars in quantitative easing, and shockingly, maybe not, the Fed might say after 6.5 years of a recovery, our economic system can handle a 0.25 increase in interest rates. I absolutely think it's an absolute joke. It's beyond a joke in terms of what this is. It's 6 years. If we had recovered, we should have been raising interest rates already. And if you'll take the Fed for what they've stated, they should raise interest rates. Absolutely. They've said the economy is good enough. They've said unemployment is good enough. They've said the labor market is good enough. Manufacturing, housing, they've said is good enough. The only thing that really is holding them back in their estimation is the CPI reports, the inflationary reports, where they say we live in a deflationary environment, and maybe we do here in the United States, but I certainly haven't seen that in terms of food prices or gas prices or a lot of our housing prices or anything else that we as consumers have to go through. And the reason that we live in that deflationary environment is quite frankly because we're the reserve status of the world, and we export our inflation over to everybody else. So regardless of what is going to happen, right now you have about, and that's coming here on Thursday, but before you even get into the Fed on Thursday, you have retail sales coming out tomorrow, you have CPI on Wednesday, building permits on Thursday, the Philly Fed manufacturing index on Thursday as well. So this is a really, really, really big week, and that's you can't understate how important it is for the Fed on Thursday. Now, most people, you can see right here, they are expecting an increase in interest rates, but that's based on most economists. Right around 52% of economists believe that we will have a 0.25 interest rate increase on Thursday. Most traders, 1 in 4 say we will have an interest rate increase. So 75% of the market does not believe we'll have a Fed fund rate. So in looking at this is very important, just given the fact that we're down off the highs, 21-25. You're down 5-6% off the highs in the marketplace. That's really nothing to get too caught up in. But the market has responded to the downside a little bit. But I don't think that is based on the interest rate increases. I think that's more based on the Chinese impact to the markets, the emerging markets. So if you do see an interest rate increase, given the fact that a lot of the downward movement so far has been China and the emerging markets, without about the Fed, if the Fed raises interest rate, you really can see it coming down a little bit, if not substantially, before the Fed comes back out and says, "Oh, we can't have that. We're going to raise them. We're going to lower them back up and go, yeah, easy monetary policy." So it will be interesting to see what the Fed does on Thursday. Again, if you take them for what they've been saying, they will raise it by a quarter of a point. I'm not sure there. I agree with. I think there's a 50-50 coin flip right now. I just don't know if you can take the Fed for what they're saying. In terms of this, I think there's a lot of uncertainty going into this event, which means you need to be prepared for that. You need to make sure your stop losses are in place. You need to make sure that you're not just a buyer and not just a seller. And there's also strategies that you can learn that can take advantage of expected increases in volatility, such as straddles and straggles, inverted butterflies, as well as one of Tim's favorite trades, the handlebar, as well as one of Gino's favorite trades, the Devicon. And so when we're looking at these are all volatility-based type trades, and that could be something that if you have a lot of credit spreads, for example, you love your bull puts, your bear calls, your iron condors, those credit spreads, even to a certain extent, covered calls and naked puts. Those types of positive theta trades have negative vega, have negative gamma, which means if you're a positive theta trader coming into an event like Thursday, you need to make sure that you're protected by adding positive gamma, positive vega, which basically is straddles and strangles and butterflies and some other neutral based volatility based trades. So that's kind of coming into it. I'm personally going to be news based trading the event. I'm going to be in Atlanta, Georgia, in front of class on Thursday, and it's going to be an interesting thing since 2 p.m. Eastern Standard Time. I'm coming right out of lunch at my 3-day trainings for Legacy and Rich Dad Education, and we're going to be live trading that on the spot to see kind of how it goes. I don't want to go into this saying they're going to do something or they're not going to do something. I think it's a crapshoot. My hope is they raise interest rates from an economics environment perspective, and some semblance of no manipulation there. I just don't know if they have it in them. I don't know if the Fed has what is in them to do what is right. If they don't raise interest rates on Thursday, look for an interest rate increase coming in on before the end of the year, however. So one of the biggest days in this year in the market is obviously coming in on Thursday. Make sure you're protected going into that. Make sure you don't have anything without a stop losses. Make sure your credit spreads are protected. And for those who are news-based trading that, realize it's going to be very, very volatile, very, very fast. And especially remember, unlike some of the other economic reports that we news-based trade where it's a number, this is not a number. This is a number first and then a policy statement second, and then it is a Q&A period third, which means the event happens at 2 p.m. Eastern Standard Time, but it's going to take the better part of the next 2 hours to really kind of price in, and I do expect some initial movement in the market, whereas and then a secondary movement based on the actual policy statement as well as the Q&A period. So enough about the S&P 500. We are in a short-term bearish downtrend at resistance on the retracement, but again, I don't foresee anything dramatic happening before Thursday. I expect less volume. I expect the Fed to really control the movement this week coming into Thursday. Now for gold. We're in an intermediate downtrend. Short term, you're looking at this type of situation here. I'm looking for gold to come back down. 1100 is a very important psychological number for it. If it breaks that level, look for that to come down to at least 1080. If not, look for gold to go back up into the 1140 area. With the dollar index is just been kind of hanging out, going neutral here. It did form resistance, coming back down, sitting at its 200-day moving average. My expectation coming into Thursday is a little bit of a negative dollar. I'll have the Forex report out later on today. But outside of that, you're looking at a downtrend, up at resistance, pushing back down, very similar to where we were right back into this range when we saw that downward movement. It's going to be interesting to see what happens at the 200-day moving average, but I do see more downward pressure on the dollar then I see upward potential on the dollar. So kind of a doji here today at a minor support level, but again, I see more downside pressure than I do upside pressure. And then Tim can certainly handle this in the commodities report. However, in looking at this right here, we got a short-term downtrend at resistance. Now it's just kind of hovering right here between 43.5 up to 46.5. If it breaks down out of 43.5 down here, look for it to come down into the 40 range, and then a secondary into the 37.5 to 38 range. And those are your major symbols, major indexes that we analyze in the market recap video. Most of the international markets are bearish right now. The stock market in the U.S. is slightly bearish right now, but we got a major event coming in on Thursday that can impact everything, called the FOMC, and look for them to drive price action quite a bit coming out of Thursday. Once again, this Matt Justice, Tackle Trading. Hope you enjoyed the market recap video for September 14th of 2015. We are out. Get in the game, one trade at a time.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.